he is. As you're coming in, please tell us where you are and where you're from. Yeah, there's a handout issue. I'm going to post that in just a moment as Fred starts. The handout will be obviously a copy of the slideshow. A couple of housekeeping items as we go along here. I have bios, of course, of both of us. That's exciting. So this course qualifies for 2 continuing education credits. You do need to be on the course, as you know, for 100 minutes. You get 2 NASBA or 2 IRS CE. You need to be on here for 100 minutes, and you need to answer a number of polling questions. In this case, I think 4 of 6 polling questions that will come up. And of course, this is even the wrong information, this slide. So this was updated to reflect this course. So answer 75% of the polling questions. Please ask your questions as we go along, but we're going to try and answer them when we get to the part of the, as we get to the appropriate section rather than stopping along the way. And at the very end, we are going to stay to answer all of the questions. And Fred, you can stay on, I guess, forever. I just need to pop over and get Ellie set up on the individuals. And if you're on both of these, of course, you'll need to get off of this one and go on to that one. Yes, there'll be a replay of this available for you. Fred, you want to start with your objectives?
All right. What we are going to do today is we are going to obviously review the provisions of the CARES Act as they apply to businesses as we know them now. As we discussed earlier, these are subject to change. If you were in Knox's webinar the other day, you know that it changed during his webinar. We are going to discuss the payroll credits and the SBA loan options. And I'm sure that many of you are primarily here for those SBA loan options, and we will get to them.
One thought is we were on by Monday, between Friday and Monday, we went through 3 different versions of the SBA disaster loan.
Yes, and trying to put everything together, trying to figure out what was the most current version of the regulations and the information out there, that was entertaining. So we are going to talk about, and then we're going to discuss how we're going to communicate these to our clients. Things we're going to discuss. These are the areas we're looking at. Employee retention credit, qualified paid sick leave credit, which is EPSLA, qualified family leave credit, which we're going to consider expanded FMLA. Delays in paying your employer payroll taxes, paying for student loan payments, taxes for next year, and those wonderful amendment opportunities that we're going to let clients know about, and they're going to be upset that we have to charge them for. And of course, those loans, the EIDL and the PPP. All right, next slide, please, John.
I feel like I'm back in grade school where you got that little tone and you advanced the film strip.
Oh, in the record player book readings where I go ding at the end or a little sound.
Yeah.
Some of these people are too young to know what a record player even is. I'm one of the old guys now. This is not good. Employee retention credit. Does my business qualify? This credit is available to all employers, regardless of size, including tax-exempt organizations. Only 2 exceptions. State and local governments and their instrumentalities, and that is not a band we're talking about right there, and small businesses who take small business loans. So this is an area you want to actually look at as we get into what the employee retention credit is. If you are not thinking about the PPP loan and you have a number of employees, the employee retention credit may actually be an equivalent or better option than the PPP loan. Next. Okay. Qualifying employers fall into one of 2 categories. This is the one that many people may fall in if you're in a shelter in place, and pretty much 70% or whatever of the United States is shelter in place at this point. The employer's business is fully or partially suspended by government order due to COVID-19 during the calendar quarter. All right. So right now, and I think they're trying to use shelter at home, shelter in place, as opposed to what they're using. But right now, we're essential businesses. Our clients may not be essential businesses. So they may be running, they may not be. They're partially suspended right now. The second way is the gross receipts test. If we look at the first quarter of 2019's revenues compared to the first quarter of 2020 revenues, if they are below 50% of the comparable quarter in the prior year, you qualify as well. So once the shelter in place orders are lifted, which could be April, May, June, August, who knows, then we're going to go to that second category when we'll compare revenues to the prior year. And these go by each calendar quarter, so they're all standalone quarters. All right, John, next. The amount of this credit is 50% of qualifying wages paid up to $10,000 in total. What that means is if you pay an employee $10,000 in a quarter, you get a credit of $5,000. This applies to wages paid after March 12th, 2020 and before January 1st of 2021. So the entire year of 2020 from March 12th forward. These are not limited to cash payments. They also include a portion of the cost of employer-provided health care. Next slide. All right, we're going to look at the example here. We pay John $10,000 in qualified wages in quarter 2 of 2020. We can get, as an employer, a credit of up to $5,000. We pay employee B $8,000 in wages in quarter 2 and $8,000 in wages in quarter 3. For quarter 2, we're going to get a credit of $4,000 for that employee, then $1,000 in quarter 3 due to the limit of $10,000. What we want to be aware of, this is credit per employee. It's not limited to just that $5,000. So if you have 10 employees who each will make up to $10,000, you can get up to a $5,000 credit per employee.
Hey, Fred, if you're going to cover this, stop me, but what's the mechanism for this? I mean, do I have to pay my normal as a business owner, I pay my normal quarterly deposits, and at the end of the return, I apply for a refund?
You are going way ahead of where we are.
Okay, I'm cool. Nope, we're good.
All right, next slide, sir. All right, and the mechanism, as John was talking about, is the Form 7200. All right, if the employee is entitled to an employee retention credit of $10,000 and was required to deposit $8,000 in employment taxes, the employer could retain the entire $8,000 of taxes as a portion of the refundable tax credit. So you have multiple employees and you have this credit. You have your payroll deposit set for the month, for the week or whatever, and these credits are building up. Do not remit those taxes to the IRS. You hold off on them and you use that money to offset your credit. If our deposits are not enough to offset that credit we have, we're going to also use the Form 7200 to get that refunded for us. All right, next slide, please, John. Qualifying wages are based on the average number of a business's employees in 2019. Employers with less than 100 employees. If the employer had 100 or fewer employees on average in 2019, the credit is based on wages paid to all employees, regardless if they worked or not. If the employees worked full-time and were paid for full-time work, the employer still receives the credit. If you have more than 100 employees on average, then the credit is allowed only for wages paid to employees who did not work during the calendar quarter. The employee retention credit is designed so that we pay employees when they can't work. So if you have 100 or fewer employees, it doesn't matter whether they work or not, you're eligible for this credit. So, I have a number of employees, we're working remotely, we're still working our normal hours, I'm eligible for this credit. John's got 102 employees. He would only be eligible. Maybe those are future XYs. I'm not sure. They are eligible for the credit only for those that cannot work and that John is still continuing to pay. Slide forward, sir. All right. How do we get the credit? Again, we're going to use the form 7200, which is an advance payment of employee credits due to COVID-19. It says they're advance payment. So what happens if you have so much people that are being paid that aren't working and the credit exceeds what your deposits are for the quarter? You can actually request an advance of this money so that you can continue to pay them. Next slide, please, sir. All right, Emergency Paid Sick Leave Act, or EPSLA. The Act's Division E sets out the Emergency Paid Sick Leave Act. It does not replace or amend an existing federal employment law, but it makes a change for this current year, basically. And it applies to employers with fewer than 500 employees, and we are required to provide paid sick time to each employee for specific uses, and this ends at the end of this year. So if the employee is unable to work and unable to telework, guess what? If they were employed as of April 1st, you may be required to pay them sick leave. All right. Paid sick time is provided if the employee is subject to a federal, state, or local quarantine or isolation order related to COVID-19. The employee has been advised by a healthcare provider to self-quarantine due to concerns, or the employees actually experience symptoms. All right. So what this means right now, if any of these three items apply, and also the next three items apply that we're going to look at shortly, is they stay home. They can stay home for up to 2 weeks. You as an employer are required to pay them. There will be a credit coming back to you later, but you need to pay them now.
Hey, Fred, I'm going to throw in a poll right here.
Okay.
All right. What is your professional designation? EA, CPA, PTIN holder, AFSP, interested bystander. You need to answer 3 out of the 4 questions. You don't need to answer them correctly. You just need to answer, but we hope you answer correctly. Fred, let me ask you something about paid sick time. So here in New York, we have a New York on pause, right? He did not order it. We are not under a quarantine, right? We're just recommended that you stay home and that you social distance and you can go out for important things. Does that count here?
That is an interesting question. I don't know because he doesn't have a full shelter in place order, but...
Well, but many of these states, if you read what they're doing, they're not saying, you know, you are under martial law. Don't leave. You know, I mean, how much of this is, you know what I mean? The feds haven't even ordered people to stay at home. They're not using the word quarantine. So it's very interesting whether this stuff will apply or not for strictly a general order of your state.
Well, I'm going to go with the thought process that if there is any kind of shelter in place or warning or request to stay home and people are staying home and not going to work, that would be a qualifying issue, I think. Maybe not as much for the paid sick time, or, you know, it's one of these, we don't know all the answers yet.
Yeah, and there's no regulations, right? So we don't really know yet, but yeah. Okay. Another 5 seconds. There are 14 of you that haven't voted yet, and you do need to answer 3 of the 4 polling questions. So going once, going twice, and I'm going to close the poll. Interestingly, 63% of the attendees are enrolled. If you want to know, are enrolled agents. 21% of you are CPAs, and 9% PTIN holders, 13% or 7% identify as AFSPs, and there are 2 interested bystanders. Very interesting.
And Mark wants to know how we know if they got that question correct.
As usual, Mark has missed the point.
All right, next slide, please, sir.
Yes, sir. Whoops.
All right, and these are on two separate slides because we handle these sets of three items differently depending on what's going on. All right. If the employee is caring for an individual who is subject to a federal, state, or local quarantine or isolation order, or has been advised by a healthcare provider to self-quarantine. Number 5 is a big one. That's going to come into play in a couple places. And if the employee is caring for the child of such employee, if the school or place of care of the child has been closed. So if your daycare is closed, if your school is closed, number 5 is going to kick in. And how many schools are closed across the nation right now? All right. If the employee is experiencing any other substantially similar condition specified by the U.S. Department of Health and Human Services. So we will have the first 3 that are going to apply to one portion of the law, and then the last 3 will kick in a different portion of that law. All right, slide, please, sir. All right, if it's 1 through 3, that employee who goes out on sick leave is going to receive 100% of the pay for up to 2 weeks.
Let's scroll back then, Fred. So you're saying 100% for items 1 through 3, which are?
The employee is subject to the local quarantine. The employee has been advised by their health care provider, or they're experiencing symptoms and they're looking for a diagnosis. So if you have a hypochondriac person on your staff, whether they have it or not, they have the flu, they don't feel well, and they're trying to get into their doctor, they're seeking a medical diagnosis, whether they have that or not, you are required to pay them sick time.
I always like the key, and seeking a medical diagnosis, because these days, what are they telling you to do? Not to do what if you think you've got symptoms?
Not to seek a diagnosis.
Well, not to go to the hospital, right? So what is seeking a diagnosis these days? Picking up your tablet and doing a telehealth session. At least here.
So Dave asked about what about people who have random hours? They may work 2 to 8 hours. There are formulas out there that we look at to figure out what their average hour is. So,
but is this also the one where it says if you don't have enough data or what their reasonable expectation was? So like if I hired you and you work a week and then you qualify for this, and I don't have any data on what you would work, it says, what was the reasonable expectation for this person? So, gee, I told you I'd pay you 30 to 40 hours. I have to pay you 30 hours of sick leave. Apparently.
That is correct. And again, if you hire them on April 1 and they go out April 2 or even later that day in April 1, you're required to pay this. There is an exemption that we're going to get to later, but basically when we're talking now, we're talking as if everybody is required to pay, and then the exemptions will be the exemptions. When we talk about 100% of pay, we're talking about 40 hours a week plus overtime. So for items 1 through 3, if they normally work 50 hours a week, you're paying the 40 hours plus the 10 hours of overtime. And again, these are credits. So you are going to get this money back up to certain limitations. So if we are out based on items 4 through 6, then that employee is going to receive 2/3 of pay, but only up to 80 hours. And yes, Ellie, only employees, not independent contractors. Sorry. All right, next slide, please. All right. With this portion of the law, you cannot force your employees to use any accrued time first. So if they're sick, this part of the law is applicable and you must pay. And Emily, yes, there are documentation requirements. So again, as we said before, if the employee is employed on April 1st, they are eligible, even if it's the first day. All right. If you have less than 50 employees, so again, Mr. Sheeley is not applicable here, and it would jeopardize the viability of the business, you get an exemption. Okay. there is virtually no documentation required for this exemption. If you feel this is going to hurt you and it's going to ruin your business, and if these employees leave, you know, that's going to hurt your viability, and that's all you need to do. All right.
Interesting. The regulations still aren't out for this.
They're coming forward, but in the FAQs and the help things on IRS and other sites, it explicitly states that no documentation is required for the exemption. It does have some detailed requirements for documentation for the credits, and when you apply for the credits, of what you need to have from the employee and from the employer.
I thought the Department of Labor was going to come out with something.
I'm sure they will.
All right, yeah.
It's all fluid. All right, next. All right, how will we get our money back? So this is the tax credit. So for items 1 through 3, where we're paying 100% of the employee's pay, the limitation is $511 per day for a maximum of 10 days if the employer is taking sick leave to care for themselves. That equates to approximately an employee making $125,000 a year. So I believe the way the rule is written is, let's say they're making $150,000 a year. You may still be required to pay them based on their time, but your credit is limited to the 511. John, what's your opinion on that?
That what's limited to the 511?
Well, you can only recover $511 per day for the credit, which equates to about $125,000 a year salary.
Correct.
What if a salaried person who makes $150,000 a year goes out on sick? They get full pay for the 150, but the credit is only up to the 511.
I believe that is correct.
Okay. Okay. Now, back one, please. So now for items 4 through 6, where you're only paying 2/3 of their pay, the maximum is $200 per day for a maximum of 10 days. So depending on which items you're looking at, 1 through 3 or 4 through 6, the amount of the credit is more or less. Okay, next. The credit also includes any qualified healthcare expenses attributable to the sick leave wages. So you're going to prorate what healthcare expenses you would have, the insurances that you would include in their pay, and that is also available for the credit. And self-employed are also eligible. So if you are a sole proprietor, all right, like Ellie gets sick and she's an independent contractor, so she would use her net income for the year, and if it's 1 through 3, they would divide that by 260 days, and that is her daily rate of pay. If she is 4 through 6 because Emmy wants bacon and she needs to stay home with him, and it's going to be 2/3 of that average. Okay, hope that makes sense. But the self-employed are included in all of this. Mark NZ asked about exclusions for S-Corp single members. In this situation, the 2% shareholder rule is not valid here. So yes, S-Corp employers are eligible, and you'd use your wages. So this is going to be an area, and we're going to see a lot of this with these, with the CARE Act, is we all have those S-Corp clients who have income of $150,000, but their wages are only $20,000 or $30,000. Well, guess what? They're going by what the wages are. Your distributable net income, that doesn't count. So it's just wages. And I already hear of practitioners where their S-Corp clients are pushing back, and they want this to be based on the full 150 and not on the 30,000 of wages they took.
Oh yeah, right. Hey Fred, I want to add one point here. So just looking at some of the questions people are asking, you know, remember that we are accountants, tax professionals, and even the couple of lawyers who are on here aren't labor lawyers. And some of these issues, so first, this is an evolving area of law. So sometimes it's okay to say it depends. But some of the other things that are going on here, quite honestly, are outside our wheelhouse. and outside our errors and omissions coverage. And the answer is that you have to correctly refer the work out and say you need to speak to a lawyer who does labor law. And taking it one step further, I'm going to pick on Fred for a minute. Fred, you have people in how many states right now?
Oh, I don't know. Texas, Louisiana, some state called Ohio, about 5.
So 5 states, and Fred may have 5 different answers to how much I need to pay, how much is their expectation. Why? Some of these labor law matters are state dependent.
That it is. And these are the things you should be telling your clients is, hey, that is a labor law issue. That's an HR issue. We are tax people. Unless you have an HR department that is doing this, you better be careful in what you're telling them. We've been looking at some pay-as-you-go or subscription HR companies that are out there. And we're now looking to recommend to our clients that they, subscribe to this. I know there's one out there called Bambee, BAMBEE.com. I'm not sure how good they are. We're in the process of researching them, but you can get HR services for as little as $99 a month. I believe there's a $500 charge to begin with for an audit. Again, we are just in the process of looking to see whether they're even a valuable or viable company, but we're looking at that and trying to add that as a service to refer our clients to, because we don't want to be that HR person, even though we do payroll.
Just as all right, I don't think our E&O covers it anyway, which is a good excuse. But one interesting point too, when I was partnering with Kim back in the day, she wanted to hire someone who had an SHRM credential and do exactly as you're talking. But I think one of the dangers you run into too, especially with these services that can pop somebody out for $99 a month, are they recent law school graduates? What level of experience do they have? It's a lot like some of these, without trashing the name of a company, it's like some of these online legal services. On the one hand, sometimes you get what you pay for. On the other hand, if you know exactly what you want, that person can deliver exactly that service. But sometimes I'm not looking for that. I'm looking to give you the facts and you tell me what I have. Just a thought.
Exactly. And some of the big payroll providers offer that. ADP and Paychex has that HR component. And it's getting to be more and more important for us at this point.
Well, as companies become more and more virtual and dispersed, the advantage, I was going to just circling back, the advantage to someone like you is that one fee, and maybe with a little bit of additions, I don't know, would allow you to cover 5 states worth of issues, which is kind of cool. Your point person may not have your answer, but they can say, hey, the guy in the cube next to me, or the guy I Slack with does handle that state, and get you the answer.
Exactly. I want to jump back. Laura wanted me to repeat the SE section, please. So if we're talking about for the sick leave credit for self-employed individuals, what they're going to do, the formula is they're going to take your net income for the prior year. I'm sure there's going to be adjustment for the FICA and the self-employed health and self-employed tax. And they're going to divide that by 260 days. They're figuring a 260-day work week. And if you are eligible based on 1, 2, or 3, you're going to get 100% of that pay as a credit, even if you're a self-employed individual. If it's 4, 5, and 6, you will get 2/3 of that number. And I hope that answered your question, Lauren.
Hey, I'm going to stand on the soapbox for just a minute. If you have S Corps taking distributions and have no payroll at all, shame on all of you, because you should be kicking those people out the door. If they're providing services and taking distributions, they should be taking the distribution as a salary. Just sharing.
All right. No, back one.
Oh.
Qualified family leave credit. So before we were talking about the sick pay. Now this is basically expanded FMLA. So this is up to 12 weeks of pay for people based on certain conditions. So in addition to the paid sick leave credit, under the expanded FMLA, an employee who is unable to work, and this includes teleworking. So sorry, Ellie, if you were an actual employee, this would not apply to you. because of a need to care for a child whose school or place or care is closed, or whose child care provider is unavailable due to COVID-19, then you can get up to $200 a day and up to $10,000 in the aggregate. All right. So this is if you can't telework or if you cannot work, you can go out under the expanded FMLA. And this just applies to item 5, where you're caring for the child because they can't be in school and or you have no other child care provider. All right. Next.
Hey, one point. I did post the copy of the slides in the handout section a little while ago. I apologize if everybody didn't see that. I did tape a note. So that is there. If you don't get it, can't find it, have trouble downloading it, email Fred or I will ship it out to you as a PDF right away.
Yes. Michael, as a sole proprietor, you do never, ever cut yourself a W-2. This is a credit against, in your case, it would be a credit against your self-employed payroll taxes that you pay with your tax return. There is a way to get an advanced credit for yourself as well, but you do not cut yourself a W-2 or a paycheck. All right. Eligible employer is entitled to a fully refundable tax credit equal to the required paid family medical leave, the qualified family leave wages. It also, in all of these, it's also going to include the eligible employer's share of Medicare tax imposed on those wages and its cost for maintaining health insurance coverage of the employee during the family leave period. The eligible employer is not subject to the employer portion of the Social Security tax imposed on those wages. That's a big one. You're not going to pay the employer portion of Social Security tax either. The self-employed in this as well are also eligible. First 10 days of this 12-week period are not eligible for reimbursement. So if they're going to take family medical leave or the expanded family medical leave, first 10 days is on their own. They may use other types of leave. So if they have vacation, sick, paid time off, they can use that to be paid by you. Right? It doesn't apply for the credit, but they can use it. They can also use the EPSLA that we talked about just previously. So if they're home for 2 weeks because of any one of the 1 through 6 issues, they can then jump into the expanded family medical leave and be eligible right away as well. All right, next, please.
Okay. Hey, can I throw up my second polling question, please?
If I say no, are you going to do it anyhow?
No, I'll do it later.
No, go ahead.
Okay, second of 4 polling questions, please. Again, you just need to answer. You don't need to get it right, although we hope that you are getting it right. When OPR audited me as a provider, they did comment on some of our questions, and they said they preferred reinforcement questions rather than my Doctor Who questions. So here we are. Under the employee paid sick leave, an employee is paid 100% of pay, 2/3 of pay, or this was written by lawyers, so it's situational and could be 100% or 2/3 of pay.
Lynn,
the name for HR 748 and HR 6201, Fred?
Say that again, please, John.
Our 2 laws, right? HR 6201 and HR 748, right? The 2 laws, the CARES Act is 748.
Yes.
What do you know what the real name for them is?
I can't even do regular code names, code section. I barely remember section 179.
It's the Accountants Full Employment Act of 2020.
Yes, we love those.
And it's the law that keeps on giving, because with all these screw-ups, I think there's going to be rep work for 5 years from now. I need a few more of you, please, to vote. 17 of you have not voted. Out of the thousands of you online, it's sad we don't get the draw like Knox, but I'm not complaining.
So, Lynn, yes, this is for wages paid on or after April 1st. So it became effective, I believe, March 12th or whatever the date is. Again, with dates and names, I'm not very good, but I understand the law. But this applies for wages paid after April 1st or on April 1st and after.
Okay, I'm going to close out the poll. A couple of you didn't get in on it. Interestingly, I would have thought this was a gimme, but it wasn't. So, Fred, under the Employee Paid Sick Leave Act, an employee is paid how much?
It depends on whether it's items 1 through 3 versus 4 through 6. 1 through 3 is full pay, including overtime. They get paid, and the credit is their pay plus the add-ons of health insurance up to $511 per day.
So 73% of the participants got this correct. 17% suggested it was full pay, and the remaining 11% suggested 2/3 of pay. So just a feedback for you, Fred. Do a little bit better, huh?
Okay. How is this all treated? All right. One thing we cannot do is double dip. So the tax credits received for both the EPSLA and the expanded FMLA would be included in income. Payroll expenses would be treated as you normally would. It's basically you cannot double dip. All right, next. All right. May an eligible employer receive both the tax credits for qualified leave wages and a small business loan under the CARES Act? Yes, you can. However, if an eligible employer receives tax credits for qualified leave wages, those wages are not eligible as a payroll cost for purposes of receiving loan forgiveness under Section 1106 of the CARES Act. All right. The link below will get you to some excellent questions and answers in regards to this as well. And as John typed in for people, if we get a frozen screen or you can't hear sound, hit the F5 key and that will help refresh things. Or if it's frozen and you can't look at us, that might be better for you as well. All right, next slide, please, John. May an eligible employer receive both the tax credits for qualified leave wages under the FFCRA and the employer retention credit under CARES? Yes. If an eligible employer also meets the requirements for the employee retention credit, it may receive both credits, but not for the same wage payments. Section 2301, and no, I don't have these memorized, allows certain employers subject to a full or partial closure order due to COVID or experiencing a significant decline in gross receipts, a tax credit for retaining their employees. The tax credit is equal to 50% of qualified wages paid to employees after March 12, 2020. I knew I remembered that March 12th date. And before January 1st, 2021, up to $10,000 in qualified wages. That's the employer retention credit. That starts March 12th. The EPSLA and the expanded FMLA begins April 1st. We have March 12th and April 1st for these credits. However, the qualified wages for the employee retention credit do not include the amount of qualified leave wages for which the employer received tax credits under the FFCRA. We expect the IRS to issue some frequently asked questions on the employee retention credit sometime during April. There is some out there now. As we continue to state over and over again, this is a very fluid situation and things are subject to change by the day and the hour. And Marty, you should be on a computer, not on your phone, please.
Marta's always on her phone.
And we've got something else coming up on John's Windows server. What's going on there?
Oh, you're not supposed to see it.
That's not your Pornhub site, is it?
No.
Okay.
So I've got 3 screens running so that I can move your slides. So everybody at home, the technology issue we're having or had, which we're working around, is this platform allows us to upload the presentation, and that way it gives you this entire streamless experience where everything is in the browser and coming down from the server. Because we made a change after the webinar started, it wouldn't let me upload it, which is why we're doing the old-fashioned screen share. So I apologize for that.
Okay, next slide, please, sir. Does the amount of qualified health plan expenses include both the portion of the cost paid by the eligible employer and the portion of the cost paid by the employee? So a lot of the questions I'm seeing in some of the Facebook tax groups and the web forums relate to the health insurance, okay? Because we have, the health insurance that we withhold from employees, and then portions that the employer pays as well. And the answer is going to depend on whether the employee's health insurance is pre-tax or after tax. So the amount of qualified health plan expenses taken into account in determining the credits generally includes both the portion of the cost paid by the employer and the portion of cost paid by the employee, with pre-tax salary reductions. However, the qualified health plan expenses should not include amounts that the employee paid with for after tax contributions. And I believe that is primarily because if we're using pre-tax, then those box one wages are reduced. So we get to add that back because that's our employee cost. Where if it's after tax, box one is not reduced for that. And yes, Eric, I don't know who runs post-tax health insurance at all anymore. Many years, I think back in 95, we had one person when I was a CFO who wanted it after tax. I've never seen something like that since. All right, John? Oh, the wonderful autocorrect. What about has? The has HSAs. Don't you? I hate that whenever I type in that damn HSA. Darn HSA. It always comes up as a has been. So what about HSA, Archer MSA with a high deductible health plan? Are contributions to these included in the qualified health plan expenses? The amount of health plan expenses do not include eligible employer contributions to HSAs or Archer MSAs. Eligible employers who sponsor a high deductible health plan should calculate the amount of qualified expenses in the same manner as an insured group health plan or a self-insured plan as applicable. So basically, you do not include those pieces in your tax credit aspect. All right, next slide. What about an HRA or a health FSA or the new and improved QSE HRA? I feel like I'm playing alphabet soup over here. Are these included in the qualified health plan expenses? Erica, what about HRA benefits? Yes. Who sponsors an HRA? Is that included? The amount of qualified health plan expenses may include contributions to an HRA, including individual coverage HRA or a health FSA, but not the QSE HRA. So some things are allowed, some things aren't. You're going to have to go to these frequently asked questions often when your clients have these various items to determine what's included and what isn't. It isn't all that simple. All right. To allocate contributions to an HRA or a health FSA, eligible employers should use the amount of contributions made on behalf of the particular employee. And everybody's giving their dates over here. I feel like I'm in an old AOL chat room. Can an eligible employer required to pay qualified leave wages fund these payments before receiving the credits by reducing its federal employment tax deposits? All right. How are we funding these things? All right. If you have to pay employees and you don't have money coming in, you don't necessarily want to have to use your money in the bank to pay them. An eligible employer may fund the qualified leave wages and the allocable qualified health plan expenses and the share of Medicare tax on the qualified leave wages by accessing federal employment taxes, including those that the eligible employer already withheld that you have set aside to deposit with the IRS. And you can use this for any other wage payments made during the same quarter as the qualified leave wages. What this means is, all right, we go halfway through the quarter and you've accumulated your payroll deposits and have not remitted them at this point. And now you have somebody that goes on leave based on either 1 through 3 or 4 through 6. You can use that money that's been set aside for your payroll deposit to pay that payroll, and then you won't need to remit it at the end of the quarter or at your monthly time or whenever your deposit is due. What this says, an eligible employer that pays the wages to its employees in the calendar quarter. Now, before it's required to deposit federal employment taxes, blah, 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 you may use that to pay these wages. If you can get reduced payroll tax liabilities with these credits, how do you notify your payroll company of what amount should be reduced? Donna, that's probably going to be on the new 941s and on that 7200. I have not delved too deep into how these are reported, but they will be able to be reported, and then you'll be able to balance out your quarterly filings.
You know, Fred, I'm not a Gusto user because I thought it was for the value it was too expensive, but all of a sudden they've got a payroll protection program report out because there was an argument, not an argument, there was a Twitter feed where they were arguing the calculation and the practitioner happened to be wrong, right? Gusto has it correct based on the changes we saw Friday with backing out with, withholding and things. So I think that's pretty responsive. So it was that Diane who asked about the reduced amount. The large payroll companies appear to be on top of this and trying to create usable reports.
Yeah, and they have hundreds of people, tens of people working on this, where a lot of times it's just us. Sandra, yes, this will only cover a small portion of payroll for those on sick leave. At times it will. We're going to get to that, and I believe that one of the next few questions is going to address that question for you. All right, next slide, please, sir. And Corey, if we've already covered it and we didn't answer your question, we're going to stay around as long as you need for us to answer questions at the end of the presentation. How can an employer, I'm going to leave out the eligible stuff. We're going to assume all that stuff is in there, so I'm not, messing up my words. How can an employer that is required to pay qualified leave wages fund the payment of wages if they do not have sufficient federal employment taxes set aside for the deposit to cover these payments? Can we get an advance of the credit? Yes, Sandra, here it is. Yes. Because quarterly returns are not filed until after the leave wages are required to be paid, some employers may not have sufficient taxes set aside for deposit. We're going to use that Form 7200 to claim an advance credit. So you're going to be able to use that to get money in advance. I'm going to caution you to make sure that if you use that you estimate and calculate very closely what your need is to pay that. Because I'd imagine this is going to be an area that is ripe for, I don't know whether it's fraud or not, but to take more than what you need. And I think they're going to be reconciling that. All right, John, next. All right, documentation time. What information should an eligible employer receive from an employee and maintain to substantiate eligibility for the sick leave or family leave credit? All right, we're going to have the employer will substantiate eligibility for the sick leave or family leave credits if the employer receives a written request for such leave from the employee and the employee provides the employee's name, the dates for which the leave is requested, a statement of the related reason the employee is requesting leave, and written support for such reason. A statement that the employee is unable to work, including by means of telework, for that reason. So it's not a ton of documentation you need to have, but you must have it. All right, we're going to continue on the next slide with these. In the case of a leave request based on a quarantine order or self-quarantine advice, the statement from the employee should include the name of the governmental entity ordering quarantine or the name of the healthcare professional advising the self-quarantine. And if the person subject to quarantine or advised to self-quarantine is not the employee, the person's name in relation to that employee. So if you have a family member and or a child, you got to give that name. If it's based on the school closing or the child care provider is unavailable, a statement from the employee should include the name and age of the child or children, the name of the school that is closed or place of daycare that is unavailable, and a representation that no other person will be providing care for the child during the period for which the employee is receiving family medical leave, and with respect to the employee's inability to work or telework because of a need to provide care for a child older than 14 during daylight hours, a statement that special circumstances exist requiring the employee to provide care. So if they're over 14, you need to have a special reason.
Hey, Fred, what if the kid is over 14 and we don't have a special reason? What other code section might come into play here if they were, let's say, a key employee?
You just use code section again.
My man, you taught a class with the code section in the title.
I know. We're talking section 139 right there.
Yeah. You want to just give a quick blurb on that? We really didn't talk much about it, but
we did not talk about section 139, but section 139 is something that came about during the World Trade Center bombings. All right. These are disaster payments. And what this allows an employer to do is to make payments to an employee or an independent contractor to help them for eligible increase in expenses that occurred due to the disaster. So if you have an employee who needs childcare for that over 14 child who's just a pain in the butt and doesn't have any special reasons to apply to anything else, you as an employer can pay that employee or independent contractor under section 139. It is not taxable income to the employee. It is a deduction to the employer. Unfortunately, there is no reimbursable credit for that. It's just you helping out the employee and or person working for you.
And you know, as a quick just add to that, the law was very broadly written. I mean, it covers things from funerals are specifically mentioned in it, but it appears to cover almost anything that you can justify. And as far as Fred and I can tell from the research, it is discriminatory. This guy's my key employee, that person not so much. I can give the key employee this without worrying about anyone else.
Yes, if I like Kathy better than Ellie, so I can give something to Kathy, and I can just tell Ellie to make bacon. So yes, you can do it with it as you will, and that is also section 139 is also for the S Corp owners because they are employees, so you can pay yourself with section 139 if you need to. Okay, next slide. Cheryl asked if there's documentation needed for section 139. There is not a whole lot of guidance on that. I would, if it's me, and on my books, I'm going to label that as disaster relief expense or something else that's noticeable and maintain those expenses in there. But there is no documentation requirements. I'm not saying that in the future, if the IRS starts auditing these issues and looks at that because they're looking for fraud in other areas in this, so that this may be required in the future.
I'd want an email from the employee or a letter that said, dear Fred, I'm having, as you know, Johnny has disciplinary problems, and I'm having difficulty with school not being in session and the daycare is being closed. I'm having difficulty paying attention to him. I can't afford to pay a private caregiver to come in and mind him during the day and be able to work for you at the same time. So I need an extra $1,000 a month to make that work. And then you stick that in the file. Mm-hmm. I think that's adequate documentation. Contemporaneous is the key, right? Getting it now, not a year and a half from now when there's an audit.
Yes. And I'm sure others who are working from home, who don't normally work from home, are noticing the dishwasher seems to run a whole lot more. The heat or the air conditioning is on a lot more. So yeah, we do have, increased costs going on with this. So more booze, you can resupply your liquor cabinet because you're drinking a lot more during this. Liquor sales have actually gone up, I believe, by 50% or so during this crisis.
Something like that. So
maybe liquor store owners should not be eligible for any of these. I don't know. Okay. Delay in payment of employer payroll taxes. All right. Section 2302 of the CARES Act, that payment and deposit of the employer's share of the Social Security portion of FICA tax and the employer share of the Social Security portion of RRTA tax deposits that are due to be made during the period beginning on March 27th and ending before January 1st, 2021 can be delayed. So we have got a March 12th date, we've got a March 27th date, and we have an April 1st date. So I'm sure we're all going to remember all of these for what they belong to. All right. So for the employer portion of these taxes, we don't need to remit them to the government. 50% of that needs to be remitted at the end of 2021. So for 2020 taxes, you can hold that money until December 31st of 2021, give the government 50% of what you owe, wait another year and give them another 50%. For smaller companies that we have and clients that we know have issues with sales tax, with payroll deposits, I'm extremely hesitant to suggest this to them if I know that come 2021, they're just going to have payroll issues, payroll deposit issues, and now we got to do, some representation work for them. I read that, Leah. Okay. Next slide, please, sir. So basically, you pay wages and you only remit the employee's portion. So these are the trust fund portion. The employee's portion of taxes withheld. Employee's portion of FICA and Medicare do not need to be deposited, and no penalties will be assessed. All right. Again, 50% total is due by December 31st, 2021, and the balance will be due by December 31st, 2022. This does not apply to employees that have had indebtedness forgiven under either Section 1106 or 1109 of the CARES Act. What does that mean? If you get the EIDL or the PPP, no deferral for you. Okay, so either get the deferral and you can use the employee retention credit, and those can both be used, or you can get the EIDL and then the PPP, but you cannot have both. So, all right, next slide, please. Student loan payments. Okay, again, this is not going to be a credit that you get back from the government. This is just something that you're allowed to do to help out your employees. All right, you may pay their student loan payments for them. Section 2206 of the CARES Act. I will never remember Section 2206 again, but that's the section that you should know. The maximum amount that may be paid for employee student loans that you get a deduction for as an employer is up to $5,250. It can be paid either to the employee to be used to pay their student loan or directly to the lender. If you do this, then the employee may not deduct their student loan interest on their personal tax return. Okay. The eligible period is from the date of enactment. I'm getting my March 12th, March 27th dates all mixed up through December 31st of 2020. The law says before January 1st of 2021.
The two dates are, some of this stuff is HR 6201 and some of this stuff is CARES Act, right? The first stimulus and the second stimulus. Yes. I want to add one thing here, Fred. This $5,250 is not new. You've been able to provide tuition assistance to employees up to $5,250 on a tax-free basis to the employee for a number of years. It's just this makes one change, which is you can put student loan interest into that, or student loan payments into that $5,250. That's the only real change.
Excellent. And my coffee cup is now being replenished. Thank you, Corey.
Corey is there with you?
No, Corey recommended that Leah get me more coffee.
Oh, did you get a pool table? Otherwise, I couldn't see.
All right, next slide, please, sir. And Pat asks, the student loan payments are not considered wages. No, they are not considered wages. It is basically a fringe benefit, right, John?
Yep, correct. And it again, this is not something that is new, other than the piece where you can put the student loan payment into it. This $5,250 is been around for a long time, and in fact, it's been frozen at that amount. It's not indexed.
Okay. And Jamie wants to know if discrimination rules on student loan payments, do they apply? I believe that you can discriminate, right, John?
I believe as well. Yep.
All right. Taxes for next year and these money-making opportunities for this full accountant employment act. All right. Net operating losses. So the Tax Cut and Job Act came out and created havoc for us in the beginning of tax season. This comes out, creates havoc at the end of tax season. Who knows what next season is going to bring us? But net operating losses from 2018, 2019, and 2020 can now be carried back up to 5 years. Notice it says 2018 in there. So 2018 for most people are already filed. So we have some data mining to do and some look backs and looky-loos and figuring out who this can assist and whether we want to carry it back or carry this stuff forward. All right. If we carry these forward, that 80% income limitation is now gone. We can offset 100% of taxable income through 2021. John, question for you. When I read it, it says can be carried back up to 5 years. So if we carry it back, must we start with the year 5 and go forward, or is this going to be what we choose?
I thought you start at the immediate preceding year, then go back to the second, third, fourth, fifth year to see if it's extinguished. Then you carry forward.
Okay, because that's different than what the old rules are.
Yeah, I don't think you start at the fifth preceding year. I think you start at the first preceding year.
Okay, so that's different than the way they used to be.
You know, I didn't anticipate the question, so I don't know. But if you remember, we had this in 2011, 2012 with the same thing when they expanded it back to the 5 years, right, during Superstorm Sandy. So we can look that up and let people know. But I mean, I don't even think the software providers are ready to handle this.
No, and again, these are all fluid, and we're all going to learn this all together. Can NOL carrybacks apply to estates? Jerry, I'm not sure. I don't know that answer.
You know, I had a conversation with Kevin Houston the other day about NOLs, and he said he had to rewrite the class. He hadn't started writing a class anyway, so rewriting it really didn't apply. So I think if you watch Compass, I think you'll see Kevin put together some good stuff on the NOLs later this year, and that's worth the money. So
okay, Miss Kathy Morgan chimes in and says same as the old year, so 5 years back, but you have so you go back to the 5th year, but then you have the option to elect out of 5 and then start 3 years back, or you can opt out of that and go 2 years back. All right, way to go, Kathy.
Now, one thing I would say is that under keeping in mind Tax Cut and Job Act took away NOL carrybacks. Ironically, because of what happened in the last recession, right? So yet here we are in an economic downturn, and they gave it back to us anyway, which is silly. Short of there being a year with really high tax rate over another year, I don't know why you wouldn't go back to the 5th previous year, but
and that's the reason I look at this, is because sometimes they have a lot lower income and they're a lower tax bracket, where I know going forward they're going to have a lot more income.
Right, and Kathy's reminding us that the 100% is only for 20 and 21 on the NOLs, and then starting in 22 it goes back to the 80%.
Okay, for these losses, are they fiscal years or calendar years? Well, I believe, James, that it's going to apply to, there's going to be set dates that we have to use. I do not know what dates they are, but they always like throwing in some dates of when it starts. All right, next slide, please, sir.
Okay.
All right. I believe people have been clamoring for this since the creation of the Tax Cut and Jobs Act. Technical correction in QIP property. All right. Retroactively now, so this is a correction to the Tax Cut and Jobs Act. So it goes from there, and it's as if this was the law then. So it's retroactively now. That's 15-year property instead of 39-year property. The ADS life is 20 years, as it should be. It's now also eligible for bonus depreciation. As I said, retroactive as if it was meant to be included in the Tax Cut and Jobs Act. Some questions remain, and I must give a shout out to Tony Nitty, who brought up these questions, and I wouldn't have thought of these. How do we get those benefits? All right. If we elected out of 163J back in 2018 because it wasn't bonus eligible, are they now locked out or not? These are questions and answers that we know the questions. We don't know the answers to this. All right. So this is all stuff that's, as they give us more guidance, we're going to know. And it could be that people who made certain elections back then are out of luck. Thomas, QIP is qualified improvement property.
Hey, I want to add one thing, Fred, that, we all clamored for this for so long, but in the meantime, we actually all went and did our homework and learned. And, because a lot of things are 179 eligible. And I know you're in the same boat I am. QIP, qualifying for bonus, doesn't help me much when most of your clients are in New York because please, your clients are too. New York doesn't recognize it. They decoupled
the bonus, you mean?
Right, from bonus, so it's an add back.
So, and yes, I personally dislike bonus depreciation because of that. I hate that different depreciation on the state versus the feds. So whether it's probably better or not to use bonus versus Section 179. If I can use Section 179, I tend to use Section 179 over bonus depreciation.
I do where eligible, but that's also part of the liberalization of 179 in recent years too. And we see this all the time. We see people forget it. And, all of a sudden you see a K1 with these huge additions and they're like, why do I owe so much to New York? Or in my case, New York City as well. And, it's 13%, 11%, 11 point something, New York State, New York City combined. And it's a significant difference if you haven't planned for it. And all of a sudden you get a K1 with a huge New York add back.
Correct. See, now in California, Section 179 is limited. So that creates, I get used to having two different depreciation schedules.
Yeah, New Jersey as well. Yeah.
Yes.
But what happens is, and forgive me, folks, but some of our colleagues miss it. They do some planning and they miss it, and the federal, they got that on the penny, and then all of a sudden the state number's like, ooh, we got these changes, and it's a problem. Anyway.
So, all right, next one, please.
All right, I'm going to pop up a polling question if that's okay.
Okay.
Remember, you need to answer 3 of the 4 polling questions to get full credit. I may throw in a 5th bonus question to help you out. I think a class on tax planning for the self-employed using the HR 6201 and CARES Act credits would be helpful. Yes, no, only if it's free. And if those of you missed it, I did post the link to our YouTube channel where you have the webinar that mostly Fred and a little bit of me did on IRC 139. It's a good hour of material there. And there's a couple other things. We did pricing on all of these SBA things with Elena Linderman. If you've never heard of Elena or Barbara Richardson, you're in for a treat. So you might want to pop in there.
Luann believes she got this poll question correct, by the way.
Okay.
So, and again, with this technical correction in the qualified improvement property, again, this is another chance for you to data mine your clients from 2018 and make some money doing some amendments.
That's a lesson learned from the pandemic here is how, what can your software tell you and how quickly can it tell you? And what systems do you have in place to communicate with your clients? How quickly can you send out a text blast? How quickly can you send out an email blast? and avoid some of these phone calls. You know, our phone did not ring off the hook when the stimulus checks came out because we had already emailed everybody or texted them, as the case may be, to let them know what they needed to know.
Yes, I fully agree with John there. You want to have some kind of constant contact with your clients, especially in these kinds of situations, which unfortunately appear to be happening more and more. We've put a bunch of information up on our website on the COVID-19 issue. We've sent out email blasts, and what we're doing this weekend after this presentation is we're going to be doing a video. We're gonna take a video and answer all the general client questions that have been coming in and give them guidance on those questions, because what I'm finding is that clients are calling up and I'm spending 30 to 45 minutes with each client and my day gets shot. So I've got to the point where I say, hey, be patient, wait till Sunday. We're going to get something out to you. And if that doesn't answer all your questions, then call and set up an appointment and we can discuss it further, which may or may not be a paid appointment.
You didn't watch the working with clients on the SBA stuff the other day, did you?
Who was doing that?
Me, Alina, and Barbara.
No, I was listening. No, I think I did, or I was listening to it. That was the
Leah
pricing.
So yeah, so Alina with her, are you ready to pay? And that's it. You know, no, you don't go any further. She gave you your 2 minutes or sent you an email with the information. Then you call with questions. Are you ready to pay?
I'm migrating toward the Alina model, and I appreciate you, John, because you've helped push a lot of us towards, you know, the getting paid up front and doing it this way. We always don't follow everything that we should be doing, but it's a thing of process. And Alina's amazing with that. It's like, nope, you pay me or you go away. And she uses that accent.
Have you ever called her office?
I don't know her personally, but I imagine it's like talking to Marta.
Until I got the keywords. No, that's Poland versus Russia. Until I got the keywords, right? They wanted to pay for a phone call to talk to her. I said, no, I'm returning her call. No, you need to.
I heard you talk about that.
So anyway, it's brilliant. She says her people aren't doing their job if you get to her without a paid engagement, which is amazing.
And this is a problem most of us are going to encounter in this scenario, as Lisa mentioned, is we try this and sometimes the clients will get upset. In the beginning, they are going to get upset because we've been giving this stuff for free for so long that they expect it. The same way, you know, years ago when they used to get the notice from the IRS, I would handle them for free. And now it's not part of the tax return. We charge them for it. We have the notice assurance program, which notifies them if they don't have that, they're going to pay for my time. So, Lisa, if you start first, and if that client curses you out and doesn't appreciate your time, get rid of them. Find a new client because they will be replaced and they are easily replaced. All right, are we done with that poll question?
I closed it, dude. We're on you.
Right. Okay. So then we need to go to the next slide then. So I'm on you. All right. Business interest deduction. This is a quick one. For 19 and 20, the business interest deduction goes from 30% to 50%. Partnerships are still at 30% for 2019. They go to 50% for 2020 without limitation. There's a whole bunch of other little things that apply to this, but I'm not getting into it here, unless you guys need me to. Next slide, please, sir. Individual loss limitation. This is that new, now gone, excess business losses rule where losses were limited to $250,000 for individuals and $500,000 if married filing jointly. All right. This is out the window now for 18, 19, and 20. So if you had clients with large losses in 2018, another data mining opportunity is this is out the window. We can go that, and that's going to, adjust some things. These losses may be used without limitation. The old law, wages were counted as business income. All right. So if you had a Schedule C with $550,000 in losses and you were married and then you had $60,000 in wages, you could use that full loss because wages were business items. This new law, once this sunsets in 2020, after 2020, wages will no longer count as business income when this law becomes the law again. Okay, we're going to get to loans very soon, Marie. That's the next section. All right, John, next slide. Minimum tax credit. All right, this was for corporations, and this is when we had we had taxable income and we had a minimum tax credit carry forward. We were able to use that to offset the income, and then we use 50% of the excess to also be used. This applies basically from 2018 going forward. You are now election is available to take the entire credit in 2018. Fully used for 2019 instead of 2021. So it's just something to keep aware of. And again, go back to your 2018 returns, data mine, see if anybody had the minimum tax credit, and then see if you can do an amendment for that. All right. And the next slide.
Fred, just as a side note, we're getting questions about notice assurance, so I just posted it. We need to go back and do practice management stuff this fall again.
I'm more than happy to do that. Yes.
Yep. We need to put together a short list of 3 or 5 topics and get it out.
Exactly. Ways to distance yourself from, John's buffet style tax practice that he hates when people use. We are not a pay one price, all you can eat scenario.
Well, I mean, the engagement letter, the Roger Nemeth, using tax help software to find work and or give people a report, and or do audits in advance. Maybe we can get him on a webinar too, plus engagement letters, plus notice assurance, other revenue things. It's a good idea.
Exactly. All right. Some other stuff that I didn't research and we're not even going to talk about here, but these were in the law. There's some aviation excise tax changes, some alcohol excise tax changes. If you have clients that do this, you are probably more well-versed in these items than I am. So, it's not something that we're adding to this webinar, but we're just mentioning. Okay, next slide is basically what I think most people came here for. The EIDL and the PPP, and this is subject to change. We keep saying this over and over again, and I'm really hoping that no changes have occurred while we've been talking. Borrowers may apply for different SBA loans. There are more loans than both the PPP and the EIDL. We're just going to talk about those two. All right. The key thing to note is there's only one SBA loan per federal tax ID number. So if you have one, you cannot get another. The good thing is if you get the EIDL, which we've been EIDL, which we've been pushing everybody to do, you can roll that into the PPP. Don't worry, Michelle. We'll get this done, and then you can drive down to Boca. No worries.
She's going to lose her place in line
Yes.
as a future ex-wife. Anyway.
Okay, next one. So where do we go for the money? All right, EIDL, hopefully everybody and their clients have already applied. Mark wants to know if you got your money yet, John.
None of us did, right? There's that whole thread in the Facebook group, and there's about 100 people that applied. None of us have gotten one. None of the clients have gotten one. So
I've heard rumors of a friend of a friend of a friend who's had one.
Right, and rumors of a friend who got a call about another piece of information. The answer is, so a couple of people who have firsthand knowledge of talking to people at SBA or Small Business Development Center have said, you got to be kidding that we were really going to get that money in 3 days. It's going to be more like 3 weeks.
Mm-hmm.
Based on, because they do a hard pull of a credit report for these things. So
in regards to that, they had 15 days to do this, and I think we're in like day 8 or 9. So the 3 days, I think the reading comes after that 15-day period. So we could delaying based on that as well.
Right.
So, all right. Then we have the PPP, which is the standard one where we're going to go to banks, credit unions, and other institutions. Wrong screen. All right. Somebody asked whether the EIDL is a grant or a loan. It is a loan that can
Oh,
be partially
it's both.
both. Yes, I was getting to that. Let me talk.
All right.
It's a loan that has the first 10,000 that is converted to a grant. So if you don't get any more money except for the 10,000 or up to 10,000, as we're hearing, not everybody's getting 10,000 is also the rumor. So that first 10,000 is a grant. And again, if you go to the PPP loan, all of this needs to be rolled into that. Okay. And as we've seen yesterday, April 3rd was the deadline for up to the PPP loans. And as we see, that is a whole big cluster of clustering at this moment. All right, John, next, please. John?
Yep. No, it wasn't going. Here we are.
When can I apply? All right. EIDL is now. We did get emails that if you applied prior to this past Sunday, you need to apply again. That there was something wrong with the system or whatnot, and so just be aware of when you applied, and that if it was before last Sunday, you need to apply again. All right. The PPP, we should be able to apply now, but as many people are finding out, we can't. I believe Bank of America has announced that they've done, I believe, almost $22 billion worth of loan applications.
But did you see how many they did? If you look at the average, is like $50,000 or $60,000 on their applications.
That's it, because I thought they'd be larger.
Okay.
I'm just guessing, but if it's 50, it's good if it's 50 or 60, because that means the small businesses are getting them, as opposed to the 400 employee places that are getting
right,
the big dollar. Because this should go to the smaller businesses, even though small business is 500. I'm hoping most of it goes to under 100 employee businesses.
Right.
So April 10th is for independent contractors and self-employed individuals without employees. So April 3rd for corporations, for business entities and small businesses, sole proprietors with employees. April 10th is without employees. All right. Next slide, please, sir.
Donna's question is, I'm self-employed, sole proprietor. What date do I apply? I would say you apply April 10th.
Unless she has employees.
Unless she has employees.
So, yep.
Okay. Rodney has a better number than I do. The average loan is $350,000. Oh, but that says SBA.gov. That's not just whatchamacallit. Wow, that's huge.
Mm-hmm. All right, who can apply? So not more than 500 employees, which it appears that Bank of America is probably handling their larger clients first. They're going in order of who gives them more money and working their way downward. Sole proprietors with or without employees, independent contractors, tribal small business concerns, and businesses including agricultural cooperatives, aquacultural, nursery or producer cooperatives that is a small business under the SBA size standards. Obviously, we're mostly dealing with the first three, but the other ones are also eligible.
Okay. You need the next one? Sorry.
Excuse me. All right. Next slide, please, John.
Yeah. There we go.
Okay. For the PPP, business and entities that were in operation on February 15th, 2020. So if you started the business on February 20th of this year, you're not eligible. Small businesses, 501c3s, 501c19 veterans organizations, tribal businesses that have fewer than 500 employees, or the applicable size standard, blah, 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 of the NACIS provided by SBA. Individuals who operate a sole proprietorship or as an independent contractor, and eligible self-employed individuals. Any business concern that employs not more than 500 employees per physical location, if they are an NICS code beginning with 72. This is hotels and restaurants. This allows franchisees or franchises to apply if they have more than 500 employees, but each location is separate and distinct. Affiliation rules are also waived for any business concern operating as a franchise that is assigned a franchise identifier code. Okay, we'll go to the next one. We'll get to that, Marta. All right, for the EIDL, the max you can borrow is $2 million. Applicants who apply for this loan may request an advance up to $10,000 from the SBA. It will be distributed within 3 days. The definition of 3 days is, I don't know.
So in the thread, Susie DiMaggio said, and this makes sense, 3 days from when they start processing the loan. And that makes sense. It's not 3 automatic days, but okay, I looked at your papers, you exist. Give me 3 days to fund your money.
Yes, and EIDL is Economic Injury Disaster Loan. All right, next slide, please. And most of this portion of the show, we mentioned the EIDL, but it's going to be primarily the Paycheck Protection Program, the PPP loan, because that is the one that everybody's looking at. And as I mentioned before, you do want to evaluate the employee retention credit if they have a lot of employees versus this. For the PPP, the maximum loan size is $10 million. And the calculation is as follows. We have a number of dates here as well. So if you were in business February 15th, 2019 to June 30th, 2019, the max loan is equal to 2.5 times the average monthly payroll costs of the 12 months prior to your application. If you're business employee seasonal workers, you can opt to choose March 1st, 2019 as your time period start date. Couple things in this area. Payroll cost has been a hotly debated topic at this point that I think we're starting to get final clarity now. I know that when those final interim regs came out, I was overtired and I read part of it completely wrong and it was confusing. Clarity has been coming.
Well, but wait, Fred, I want to say this. You went back to the original source and you read it rather than take internet rumor and innuendo from other people.
Correct.
So reading it right or wrong, you read it, you said, oh, crap, and then you consulted with everybody else, and it's still a little crap, but it's not as crappy as it was.
Yes, and hopefully they're going to change things or not change things. I don't know if I wanted to change things again anymore, but they might. And also, they really haven't just defined what they consider a seasonal worker. I didn't see anything in that. Maybe it's in there somewhere, but I know I did not see that anywhere. If you are not in business between February 15th of 19 through June 30th of 19, the max loan is equal to 2.5 times the average monthly payroll cost between January 1 of 2020 and February 29th of 2020. So if you weren't in business then, it's the last 2 months. So if you took out the EIDL between February 15th and June 30th of 2020, which we all have applied for, and you want to refinance that loan into the PPP loan, you would add that outstanding loan amount to the payroll sum. And this is one of the things that was weird and kind of clear/unclear is, let's say your average monthly payroll was $10,000. Before we were thinking you would have a $25,000 PPP loan. So one of the examples that they say, if you got the $10,000 EIDL grant, now the PPP is $35,000. And I believe only the 25 can be forgiven and the 10 becomes a loan. But that was still one of those things where I think is unclear at this point. But I'd imagine that the forgivable portion is only going to be that 2.5 times payroll. Does that make sense, John?
Yes, sir.
Okay. Next slide, please.
Nobody's paying attention, Fred. They're just asking questions.
I got it.
I can push a button called free for all, and they could all talk and turn on their cameras at the same time.
Do we want to see that? It's early in some places. So, what does payroll include? All right, this is the biggest part of the calculation. And if you are using, a Gusto or a Paychex or an ADP, IOP, whatever they use, they're going to have this stuff built in and have reports built for you. If you're doing payroll for clients, that's going to be a big help, and that's going to help you get these loan applications out. So what payroll includes is compensation, salary, wage, commission, or similar compensation, payments of cash tip or equivalent. I would imagine these cash tips that you are including must have been reported on your books and records as well, and not the cash tips that we all know don't happen that are under the table. Payment of vacation, parental, family, medical, or sick leave gets included. Allowance for dismissal or separation. Group healthcare benefits, including insurance premiums. This is a big one, retirement benefits. Okay. Some people have thought they can bump up retirement benefits and increase that monthly amount. State or local tax assessed on the compensation of employees. So that's your state unemployment. That's based on the amount you pay your employees. If you have some kind of state or local tax that is not based on your compensation, you do not include that. All right, next slide, please. What does payroll exclude? Employee owner compensation in excess of $100,000. So if you've got the owner that's making $125,000 for an S corp, only the $100,000 gets used in that calculation. You do get to add on top of that, though, the other items that aren't technically wages. So the health insurance and the retirement, you believe you get to add on top of that. If you're going to say something, John?
I was going to say that Sandra had a question on your third bullet point.
From before?
Sandra, one slide back, because everyone's asking loan questions.
You go back one slide for a minute.
There we go.
Allowance for dismissal or separation. I don't know what that means. That was in the law. That was in that IFR, interim regulations. I put it in. Maybe it's severance pay or whatnot. So if I paid somebody severance pay,
but not related to COVID-19, to the outbreak. In other words, it just so happens that February and March, I let someone go. They're on payroll or they're on salary continuation for a year. I think that's what they're saying. It's not specifically excluded if it's salary.
Right. Lynn Jacobs asked about the S corp distributions. Well, we don't want to call them distributions because it's the remaining net income after they took their wages, because that can stay in the corporation. They may not get those distributions. This is where we talked about earlier, where you have that S corp owner who's net income is $150,000 and they're only taking a $30,000 W-2. We're not going to let John get on his soapbox again, but only the $30,000 of W-2 wages is included in that calculation. And I've already heard of S corp owners who do this pushing back and thinking the full 150 or at least the 100 should go in that calculation. Too bad for them.
Hence why the banks are going to ask for the tax returns, and they're all asking for the 941s. Mm-hmm. One distinction, neither the S corp profit or the distributions, which could be two different things, neither one of them counts.
Correct. So, and I don't think that like with the section 190, with the 199, where if you don't use reasonable comp on the return, you need to use reasonable comp in that calculation. That's not going to kick in either. So they can say, hey, I'm using reasonable comp. So that W-2, that 30,000, that's their calculation. Same thing for those Schedule C clients, because self-employed people can do. That sole proprietor, is driving a nice car, but always seems to only make, $30,000 a year or has a loss every other year. They're not going to qualify. We do not know if there's going to be add backs to that net income of sole proprietors. So if we took a large section 179 in 2019, is that going to hurt them? Is that going to be an add back? Do we amend that return and fix that? I don't know. So what we exclude, if you're an employee who is outside of the United States, you exclude that payroll. That does not count. This next bullet point is the one that created all sorts of confusion, because when I first read this, I just read it without regard to the dates, and it kind of freaked me out, and I had a few, discussions on it. So, and I don't understand why they have this in here even at all. I have some guesses, but I'm not sure the reason. But federal employment taxes imposed or withheld between February 15th, 2020 and June 30th, 2020, including both the employees and the employer's share of FICA and the Railroad Retirement Act taxes and income taxes required to be withheld. So that's telling me federal withholding taxes and both the employee and the employer's share of FICA are excluded for that time period if that's part of the time period you're using for your loan. So many banks are asking for the calendar year 2019, but the law says the prior 12 months. So theoretically, the bank should be asking for April 1st, 19 through March 31st, 2020, which would require these exclusions to kick in. To clarify, commission is included on the compensation. Yes, that means commissions added as part of W-2 wages. Where would commission be shown elsewhere? You would not do 1099 commissions, I hope. So yes, commissions would be added to that compensation package, and it should be on your W-2.
Hey, Fred, there's about 50 questions in the Q&A section. So why don't we, this is my, let's stop doing questions now and we'll hit them all at the end.
Okay. We'll run through, do we want to run through these more quickly and get to those questions?
I'm just thinking because we're actually at the 100 minutes. So if people want to go, I'm going to ask the last polling question. Then they can go if they need to or want to, right? They'll have earned their CE.
Okay.
So,
and then I'll run through these more quickly, and then we'll get to the question.
Yep. So if you would, the next to last poll, there'll be a surprise poll thrown in. But if you've answered 3 of the 4 polling questions, and you've been on since the beginning, you're at the 100 minutes, you've earned the 2 CE. So if you do need to go, I don't want to hold you.
And Catherine, I'm thinking it's because of the deferral, but it also doesn't make sense because if you get the loan, you're not allowed to do the deferral. So I don't understand why that's in there. So Catherine asked, for the payroll taxes, is it because we get to defer those taxes until 2021 and 2022? But if you get the PPP loan, you're not allowed to utilize the deferral. I think it was just the people who wrote this were writing it very quickly and did something. I don't know. Okay. While the poll's going on, I'm going to continue to talk about some of these things so we can get through these slides and answer your questions. The law, as originally written in the CARES Act, included independent contractors in this calculation. The new regulations issued last week excludes independent contractors on the basis that independent contractors can apply on their own. So, obviously independent contractors are going to take their income less their expenses and get the loan based on that. Employers who utilize independent contractors cannot include them in their PPP loan. All right. John, jump 2 slides ahead, please. Okay. Permitted uses that will apply to forgiveness. Payroll costs, employee salaries, the health insurance premiums you pay, and costs related to the continuation of group healthcare benefits. Again, in all of these things, you cannot double dip. Mike, payroll independent contractors are not included in this. It was explicitly taken out in the last regulation that was put out. Payments of interest or any mortgage obligations, but excluding any prepayments or payments of principal. Rent, including rent under a lease agreement. Utilities, and interest on any other debt obligations that were incurred before the covered period. Okay, we were going to add some slides of how to process the EIDL and everything, but we're basically at the end of what I wanted to talk about.
Hey, Fred, wait, you can address this, but I just want to ask, a common question we're hearing from folks is that, I have a home office. Can I use this money to pay those bills? So there's 2 answers here. There's one about what can I use the money for? The other is what's going to count for forgiveness.
The problem with all of this is they created this law, and now they're relying on the banks to come up with their also requirements. And we had the 15-day and 30-day periods of which the banks were allowed to do some of these things. And if you have an accountable plan, maybe it's included, maybe it's not. These are good questions that I don't have the answer for right now, and that it's all going to come clear in the next week or 3.
Oh, all right. So here's what I wanted to say. It reads to me, you can use the money to pay your personal bills, especially if you're a sole proprietor, but it's not going to count towards the forgiveness portion. I don't think. Maybe it will.
I'm not sure. Again, if you have an accountable plan where you're reimbursing for rent or whatnot, does that apply? I don't know, but if you have a separate building, that's absolutely included. It's going to be more murky for those sole props that are using their office in the house,
and even murkier the sole prop, the S corp using the office and home. I
Correct.
think it's even murkier. Well, let me go through my couple of slides. I'll go quickly, and then because I think we've just got 100 hours worth of questions and not enough time. All right, so we already talked about 139. As Fred mentioned, you go to SBA.gov if you'd like to look into getting one of these loans. So I want to say this, and Fred, correct me if you disagree. I think every business in America should apply for the 10K advance grant. You have to be in a federally declared disaster area. The president declared the entire country a disaster area due to COVID-19. So you should go online. It'll take you a couple of minutes. Do the work. Apply for the 10K. We were all debating last Sunday that could be, well, Marie, who I don't know if she's on here or not, was telling us that the money would be in her account Wednesday, and we were all friendly arguing about it. And the answer is that nobody has any money yet from this, even those that applied with the right application, because there were several versions of the application. So here's the website you want to go to. COVID, and I'm sorry, it's on the other screen as well. I keep touching the other screen as if you're all here and see me touching it. Here's the direct link to pop over to that. Patricia, I would apply for both. That's what I did. I was going to take you through what this looks like, but I'm not going to waste too much time on it. I want you, so this is in the handout. You'll see what the screens look like. So first, they're going to ask you what type of business you are. Next, they're going to ask you to review a few items. You can't be in an illegal activity. Generally, this means no cannabis businesses, right? This is 7B, by the way. This is loan 7B. No cannabis businesses. Do I own 50% greater of this business for is any 50% owner more than 60 days behind in child support? The interesting thing is the only offset on stimulus and apparently on these loans is very delinquent child support. You can't be an agricultural business. That's because they want you going to the USDA for your funding. There is funding available there. You don't do live performances of a prurient sexual nature. When I first saw live performance, I said, there goes the CE provider. We can't apply. Applicant does not derive more than a third of their income from legal gambling. Applicant is not the means of lobbying. Applicant cannot be a state, local, or municipal government entity, and you can't be a member of Congress. I guess you can be the president or the vice president, but you can't be a member of Congress. Simple stuff. Business name, trade name, EIN, organization type. The drop down for organization type, CSE, are you a sole proprietor? Are you an S corp? Are you a C corp? Are you a nonprofit? Some nonprofits are allowed to get this. Are you a franchise? As Fred said, franchises are allowed to get it. They want to make sure that you as the franchise are separate. You as the McDonald's franchisee are treated differently than McDonald's Corp. What are your gross revenues for the 12 months prior to the date of the disaster? They're specifically using January 31st, 2020. Your cost of goods sold. A lot of questions on Facebook. Cost of goods sold. If you don't have cost of goods sold, if you're a service business, Fred, what's my cost of goods sold?
0.
Yeah, I agree. Rental properties, lost rents due to the disaster. Plug your number in there. You're entitled. Nonprofit cost of running your nonprofit. There's a couple of nonprofit questions here. I won't spend the time on them, but it's pretty straightforward. Are you getting compensation from someplace else? I think they mean insurance. But Nina, yes. But do we know anybody? Actually, Nina, I'm not sure. I know they can get a paycheck protection loan.
They cannot get the EIDL.
They cannot get the EIDL. So, one of the things that they're asking about other compensation has to do with insurance. But as we know, you've probably all gotten a letter from your insurance company that says they're going to what? Not cover viruses, which is a terrible thing. Again, continue your address. There can't be a P.O. box, city, state, zip, phone numbers. Date the business established, current ownership. So a couple of folks were asking questions about current or back. Donna, it's an HTTPS, which is a secure site. So I think it's fine. They do want to know how long you've owned the company. So someone asked earlier about a PPP where there was no income since they purchased the company due to the virus. I don't know that I would have bought a business during a global pandemic, but maybe you got a good price. But that, except for some tax practices, I guess, if some of you want to retire. But going back, this seems to allude to the fact that you can look at your prior historical information, even if you did not own the business at the time. Other information that it asks, is anybody suspended or debarred from doing work with the federal government? Have you been convicted of a crime? Now that's convicted, not indicted, Fred.
Oh,
so
good.
That answers your question, right?
Yes.
Are you presently subject to an indictment, criminal information arraignment? Have you been arrested? And have you any criminal offense other than a minor vehicle violation? Now, we understand. So after this, I thought I stuck it in here. I didn't. After this, it asks you a question. Do you want to get the $10,000 advance? Oh, here we go. Let me try this for a second. There you go. Do I want the $10,000 advance? Check the box. Where do I send the funds? Silky, I did tell you to send me the email, but of course I've been on the webinar, so as soon as I'm off, I'll take care of it. Anyway, this was the joke we had on Facebook, and I think that everyone in America that has a business should apply for this. Can you think of any reason not to, Fred?
I can't see any reason why you wouldn't want to do this.
Now, I agree. If they're going to run out of money, we're probably going to see something less than the full boat. But I don't see that as a real problem.
It's just when they start processing them and when they start dishing things out. Somebody asked in regards to foreign ownership of the corporations. If your foreign ownership is 20% or more, you are excluded from these loans.
Oh, so there's a question, John. You said everyone should apply for the loan. Explain why I would. You might be allergic to $3,000. I don't know. This doesn't appear to. This part of the application does not appear to be. We're all affected by it. So these emergency grants are available. Okay. Right, and Amanda is reminding us that it's up to $10,000 based on review. I agree. So that's why I think everyone should apply for it, Catherine, because I think that there's going to be something provided to everyone because you are all affected at some level. And those of us right now that are saying I'm not affected, how many of us are going to have an extended tax season and be working through July? The people used to roll in on April 12th. Now they're going to roll in on July 12th. Now, for those of you in California, okay, it's warm either time. For me, it's cold in April and it's really nice in July. I don't want to be seeing here.
Also, it's if you've been affected or expect to be affected. How many of your business clients are reducing the payroll that they're getting or possibly closing down because of this? So
Right.
you may not be affected now, but as John said, in those warmer months, as this extends, as businesses begin to close, you will definitely be affected.
Jerry just said, did you say rental property owners should apply? My tenants haven't defaulted yet. Two thoughts for you. In most states, as things have gotten worse, there are 60 or 90-day that you can't evict people. Well, that's amounting here, according to my clients who have rental properties. It's becoming a rent-free holiday. People aren't paying their rent. And once they don't pay the rent, do you really think they're going to have 90 days worth of rent at the end? So I do think you're going to need economic forgiveness. I also think if a tenant moves out, you're going to need to clean that house. I mean, if I were moving in, I would ask you, when is the last time the place was professionally cleaned? You know? All right, so the Q&A. Fred, I read them, you do these with me?
We can do that. You do the reading, and then we'll both answer.
Okay. So on the EIDL app, one of the last boxes you have to check mentions secular social service. Can you explain what that attestation means?
Boy, I believe that is, I don't know. The secular social service is,
Means a non-religious do-gooder organization, right? Not a church, not church affiliated.
So it's not, because it's not faith-based, and they're doing social work.
That's the answer, not faith-based, right? Patricia, the loan rate has changed twice, right? It was 4%, it was 0.5%. It is currently 1%. Now understand something. Your applicants are not paying for this loan to the bank. The SBA is separately paying the banks for originating the loan, anywhere from 0.5 point to 3.5 points, depending on this. I think 3.5 is the top, depending on the size of the loan. So, but the other argument is the banks are at 1%. What are they loaning against? They're loaning against the 0% savings accounts these days.
Mm-hmm.
I don't even know what a savings account pays. One thing that's unfair here is the SBA the federal government is having the banks write this. They're not originating it for the SBA. As of right now, I think the bank is stuck with the loan. They just have 100% SBA guarantee.
Yes, and these can be sold on the secondary market, so it may not stay with the bank you start with.
Well, I think what's going to happen is the Fed is going to buy them.
Mm-hmm.
Someone else is going to service them, and the Fed's going to stick it on their balance sheet as another way of printing money. A couple of questions. How do I correct a bad application? How do I correct errors on the application? Well, you shouldn't type so quickly. But if it was something as simple as you spelled someone's name wrong on a Gmail account, I would just create a new Gmail account to capture the email, right, with the wrong address. Otherwise, you can call SBA. You can get a person on the phone. I understand that they will fix it. So you'll have to make the call. You'll have to sit on the phone to get it fixed.
And I don't think the wait lines are as bad as some of the IRS wait times. I know people have been, 2,000 plus in line and have gotten in kind of relatively quickly.
If you have terminated your employees, can you still apply for the EIDL? I don't see why not. Mm-hmm. It doesn't have that requirement. Sole proprietor getting 2.5 months of net income, can that be forgiven? If they follow the rules, yes. Right? That's the whole idea. So did you say this, Fred? Forgive me if you did. But I think everybody in America that is a business or as a sole proprietor should apply for the Paycheck Protection Loan, at least for the maximum amount that they think they can get forgiven.
Absolutely. And if you do not use it, you can leave it sitting in the bank. And if you can't get the eligible expenses to have it forgiven or only partially forgiven, you can simply pay it right back then at that point.
Yeah, you do get 6 months no interest?
I believe so.
Right, there was a year, but they cut it to 6 months when they changed the interest to 1%. I think so. Right. Yeah, I mean, you get to the end of the year. Oh my gosh, thank you for this money. I don't need it. Pay it back. There's no prepayment penalty.
Right.
So I would think everybody should be doing these. Yes. There's a comment: if you prorate your home office percentage, you're using the 88.29. There's no guidance for that. That's our concern. Payroll calculation for the last 12 months can be April 1, 19 through March 31, 20.
That's going to be based on your bank.
Right. Well, what I think, Fred, what I'm seeing is they want the rolling year.
Mm-hmm.
Remember, I can apply for this up till June. So
Correct.
they want the 12 months ending before you're applying for the loan is what it appears to be. But yeah, the bank underwriting can change. And the last thing I knew, the banks didn't have their underwriting stuff yet, right?
No.
And for one other fun thought, and I didn't know this, apparently if you take SBA applications as a bank, I guess there's two levels. The banks we trust and the banks that are new or we don't trust. The newer banks previously did not have the authority to underwrite the loan and get the SBA 85% guarantee. Well, on this 100% guarantee, apparently, yes, they can. Every bank that's taking these apps is underwriting their own loan and getting the 100% SBA guarantee. The SBA does have their own enforcement people. Fred, you ever been involved or seen them come around?
I have not. I would hope that they're going to look at some of this for fraud and checking in regards to that, but I have not seen it in the past.
Right. For forgiveness of some operating expenses, transportation was listed on the Chamber of Commerce 33120. Does that include fleet expenses? Tara, I don't know, but it's something we can look at. I don't know. And again, we don't have regulations out. Congress wrote three broad things. If you pay it for this, this, and this, you're good. Then all of a sudden they came out with some of the lending information that said make this adjustment and that adjustment. So this is going to change a little bit. But Fred is correct. You pay the thing back certainly at the end of the 6 months. But even if you don't pay it back, the rate is 1%. I know very few people that don't have at least some debt where they're paying more than 1%.
That is correct.
Fred, a sole proprietor with a business that started in prior years, but became an S Corp on 1/1/20. So there was no Schedule C in 19, with one 100% shareholder and no other employee. How is the loan amount calculated?
Is that a single member LLC that became an S Corp, or was it a brand new S Corp as of 1/1, so it's a new entity?
Let's cover both. If it's a brand new entity,
then it's a brand new entity, and the brand new entity rules apply. So yours would be based on January 1 of 2020 through February 29th of 2020.
Okay.
If it's a single member LLC and converts to an S Corp, I'm going to believe that is a business that was in business as of February 15th of the prior year, and it would be eligible under those rules.
Well, let's think about it for a minute too. Bank rules versus tax rules.
Mm-hmm.
It's really still an LLC legally, and it's the same LLC that it was. It has continuous life. It merely made a tax election.
Correct. And as you said, it's the bank rules versus the accounting rules. And ultimately, it's going to be up to your bank as to what they want to do. In my own personal situation, I bought 3 small tax practices that I brought on board as of January 1st of 2020. So my payroll is a lot higher for 2020 than it was in 2019, but I'm not a new business. So I got to use those rolling periods. So my average monthly, payroll is going to be less than if I used the January 1st, 2020 going forward.
So there's a question, can a property rental owner apply for an SBA loan? The answer is yes. Now, where you want to be careful here is, first, if you have collateral and it's a $25,000 or more loan, the SBA will take collateral. So they'll put a last position lien on the property, which may or may not be something you want, right? It'll look like another mortgage. If you own the rental personally and you own a home personally, I think they put a lien on both. How
many rentals have profits?
They do. I think they do. Pension contribution for owners is added to the $100,000 salary. What about a defined benefit pension? I thought I read that said that does not affect the $100,000. So I have a client with a $65,000 salary and a $290,000 pension contribution to his defined benefit plan. We're going with adding the two together, dividing by 12, and multiplying by 2.5, and that's the amount of the loan he's submitting. He fully understands that the bank, A, may have difficulty with it, and B, not give it to him. He is worth $10 million, and this is one of the phone calls I made where the person said to me, there's nothing in that for me. And I said, well, maybe there is.
And the thing to keep in mind is this is a good faith calculation. The way the law reads,
Right.
it says you can include that. So if the bank gives it to you, that's going to be a bank decision. If they don't give it to you, then no harm, no foul. If they do give it to you and SBA comes back afterwards, I still believe it's no harm, no foul. You may have to repay that, and it may not be forgiven.
Right.
But I don't think you would get in trouble.
I mean, I'm going to go with, in reading through it, did they mean this guy? No. But did they mean people who have a legitimate pension plan, a SEP or something? Yeah, I really think they meant that. And I do think, just like the health insurance, it's separate and apart from the 100K salary limitation. But my opinion, I haven't seen anything to the contrary yet. Workers' comp is not an allowed expense. SUTA is. Agree, disagree, Fred?
I agree.
Right. Are they going to include, I don't know who they is, workers' comp? No, workers' comp is not a payroll expense. This one, I got an email on this one too, and I've been a bad guy about not responding to it. Does family control of several entities with different EINs affect the ability to apply for either program? How about entities with different EINs that have consolidated filings? So what's interesting is, I think, my opinion only, that if they're separate legal entities, they're separate legal entities. I think the only problems you run into are the 500 employee issues that there's aggregation rules. Did you see anything different, Fred?
No, that falls, I would imagine, under the affiliation aspect of it.
Right.
But it does say one loan per EID number. In this situation you described, where they have a consolidated one, it might be a different answer.
If I don't have COGS on my return, do I list the operating expenses even though it looks like they are asking for nonprofits? They only want COGS if you have what, Fred?
If you have products.
If you have COGS.
Yeah.
Yeah. 0 is an acceptable answer for COGS. Now, if I were a retail store, I would not want to be putting down a 0 there. But conversely, if I'm an accounting practice, I don't think I'd want to be putting a number there.
You're going to put down what they ask. Do not interpret what they're asking. If they ask for COGS and you don't have COGS, put down 0.
Right. Wow. This is a show off, right? I have clients with 10 LLCs. They range from entities that own oil and gas royalties to entities that are owned by the client's self-directed IRAs. Should they apply? Well, I'm going to say no, because I'm not sure, but I would think if it's a passive activity, you're not talking about an active oil and gas, because you're saying royalties, right? So they own it. Well, so Landon, I'm going to think about this twice. So if I own a piece of, if I own a royalty because I own the land, right? I sold the underlying rights. That's real estate. Maybe I would apply. If my self-directed IRA owns something, I'd want to know what it is, but more often than not, I'm going to say no. So if my self-directed IRA owns mortgages, I'm going to say no. If my self-directed IRA owns a C Corp, maybe.
And when it comes down to it, if you apply and they want it back, you just give it back. If you apply and they don't give it to you, well, you didn't get it.
Well, remember, too, they are going to underwrite these things. You know, we just checked the box, right? And we're showing you the $10,000. These things are going to get underwritten at some level. Because I assume we're talking about the EIDLs and not the paycheck protection loans. You need to be a sole proprietor or have payroll. So there's I think we're gonna actually have to cut it in a few minutes, but there's a question here about, can we go over what we are allowed to charge for doing these applications? And Fred and I were talking about this beforehand because we knew this was going to come up. So Fred, you go ahead, then I'll go ahead. And
okay. They have, within the law, they document or indicate what agent fees can be paid, and it's paid via the SBA. And for those, the SBA banks their fees, and they're paying the agents for these fees. Some banks, the banks are creating their own applications. We have the form at the SBA site, but that's just a recommended form that they're using. The banks are all doing their own. My local bank in my town has an area that asks whether you're paying an agent to do this, and they're paying out that agent fee. Some banks, I understand, are not including that in there, and you may not be able to get an agent fee from that bank. By law, they're supposed to. The SBA and the regs state something about you're allowed to charge 500. They mention amounts: 500 for an individual, 2,500 for a business, and applying for these kinds of loans. The AICPA has issued guidance, and then they say agent fees are okay. There's a difference between charging people to gather up information and do planning in regards to these versus actually applying for the loans on their behalf. You need to look at various factors as to what you are charging, whether you should be charging. And if there is an agent fee with the bank, I would strongly recommend that is how you charge clients.
So there's a question about the EIDL having a collateral required. And the question is if it's greater than 5K. I hope you mean greater than 25K, right? But yeah, if you're an individual, not an entity, applying, yes, they will the SBA puts a lien on your house. Lien has a negative connotation here, but it appears like it's a mortgage or other secured debt, right?
Yes.
So one thing we learned here is that a lot of people, including myself, have locks on our credit, right? You have some of those things, those freezes.
Unlock those.
Yeah. So you have to unfreeze those around the time you apply for this.
Yes. And what I believe they say is if you have no collateral to give, they're going to want collateral. But if you have none, that's not going to prevent you from getting the loan.
That's correct. But if it exists, I'm not clear because, you know, I'm me, right? And I'm disorganized. I see a squirrel and I forget my thought. The SBA, if collateral exists, they will take a lien on it. So my thinking is that you should just advise your clients in advance. So if I'm a sole proprietor and I apply for the EIDL and I'm going to get the actual loan, I will in fact get a lien. But listen, this is low interest money, and you can always pay it off if you don't need it or don't want it. So I think we covered everybody in the Q&A thread. Fred, you see anything in the chat thread we need to?
No, John O'Neill and asked about bankrupt entities applying, and I have seen nothing to indicate that the bankrupt entity cannot apply for these loans. The ability to repay is not an indicator for the PPP loan. So you can be deemed that you can't pay back, and they will still give you the money.
I'm not an attorney, obviously, but I wonder, and Jack has a lot more experience with bankruptcy situations than we ever will, but I wonder if the trustee would get involved. And once is that necessarily something you want either, because what if the money comes in and the trustee says, I'm going to take thank you for borrowing that money. Here's what we're going to do with it. Rather, and you're going to get stuck with a potentially a tax bill, or income from it. But actually, that's interesting too. PPPs, they said if the loan is forgiven, there's no debt income, no income from discharge of indebtedness.
Correct.
Until I didn't sleep enough, right?
So somebody also asked about charging fees for the EIDL loan. For the initial application, I cannot see charging pretty much anything for it. It literally takes all of 5 minutes, John?
Yep.
So they can easily do it themselves.
I'd spend more time on the phone with the client who called up and said, what's my this, what's my that, what's my data formation, than if we just did it ourselves. We have been calling them, explaining it to them, and asking them, confirming the bank account information that we have.
Yes.
Yep. So, all right. So Cecily's asking the question. So we in fact are indicating that we helped fill it out. Our fee is $0. Any of the SBA stuff, I'm not going to get paid for it. I'm going to do it as a courtesy. Any of the other paperwork that I do, I'm charging for. Putting together a 50-page, Samantha said, for her own thing, right? As a CPA firm with 2 employees, right? She said she had a 50-page document submission to her bank. So these are an involved thing. So get paid for it. I'd probably do a flat, if it's your existing clients, I'd probably come up with a flat price, and that's easy for everyone to understand, and have staff do as much of the work as you can. But and then that way you can honestly say, I'm not charging the SBA fee. Now you have one problem there, which is if my do-it-yourself client who does everything but the tax return comes in and says, help me fill this out, I've done everything else, and here's my stack of papers, you can't charge them.
Right. There's a difference between consulting and planning versus doing the application. I have seen some people looking at this as some kind of a money grab and advertising, and I've heard rumors they're charging $2,500, $5,000 and up.
Without mentioning the name, there's a one of the self-help gurus for accountants is telling people what the max is, which is $2,250 on some of these, not the paycheck protection loan, but maybe it is the paycheck. I don't know. And he's saying you should charge that. So
I find that unconscionable. You can feel free to charge that, but reasonable consulting fees. Everybody's going through a crisis right now, so we're trying to look between the clients that are going to need a lot of time and need to be charged a consulting fee versus those few ones that just need a few minutes of our time, and we're going to help them assemble those and possibly not charge. Everybody's got to decide what they got to do for their own business. We all have to pay our own utilities and our own heat and everything and keep those liquor cabinets stocked. So we need to, charge it sometimes, and it's okay to charge, but separate consulting versus actually preparation. And if you can utilize banks that pay those agent fees, there's no reason why you shouldn't take that, because it doesn't impact the client at all. It's built in. So,
putting together one last polling question.
Yeah, somebody wants to know the payback on the I believe the 7B is the PPP loan. It's
7A.
7A is PPP.
Right, 7. Yeah.
Well, the 7B would be the EIDL then. Well, either way, the EIDL can be up to 30 years, I believe. The PPP is a 2-year repayment. It was allowed to be up to 10, but they've determined that 2 years is a proper time, that we're going to be out of this crisis by then, and business will be normal by then, and you'll be able to pay it back by then.
Well, and if the economy is doing better by then, you're going to see the value of these loans sink for resale, because what's the value of a 1% loan as the economy does better? And that's the problem. Interesting as these are coming in. We're running about 90-10 with 10% of people not knowing about the EIDL loan.
Wow.
I mean, EIDL grant, sorry. Okay, there's about 50 of you that haven't voted yet. All right, if you need that fifth question, there's still about 50 of you that didn't vote yet. If you think you missed one, please grab it. Pretty please. And then we're going to end this, one so I can do the bathroom, coffee, and eat thing. Get ready for the next webinar in a half hour, and get on there for Ellie. All right, I'm going to close it in 30 seconds. If you haven't voted, 30 seconds, please.
And Lee is yelling at us, and we have to answer Case's questions or Walter's questions.
Case of beer, yeah.
Case of beer. That is something about his rental property. Case, could you answer my question, Fred? I'm going to bring up midget porn. Okay. Case, can you retype your question, please, so we can see it, so I don't have to search?
Anyone who did not registered for both classes and did not get an afternoon login, email. You have to do one extra step. Email john@taxpracticepro.com, and as soon as we're off this, I will email you out what you need to do. It will take you 30 seconds. Basically, you need to go back to Big Marker, go into my page, choose the other class, and then when you buy the ticket, say use my bundle credit.
Looking for Keys' question.
I just answered your question. Roselle, thank you. Sue-Ann, email me. Mary Sunderland, what's the next webinar? Individuals, Mary. You're welcome, Colleen. Ron, email me, John at Tax Practice Pro. Anybody who doesn't have the login, John at Tax Practice Pro. Amanda would like to know, going back to the tax credit, if a business is new and does not have the prior year income. Oh, I think we covered this. What are the stipulations? We covered that. What are the stipulations to show reduction of income? I would use the base year return from that I bought the business based on. If you notice, it does ask you on the questions that, you know, how long have you owned it? How long has the business been in existence? How long have you owned it? Unless we hear otherwise, I would use the larger, idea of, well, it's a going concern that I purchased or changed in control, and use those prior year numbers, right? Nothing changed except the ownership.
Mm-hmm.
Did we get Keys' question
No,
yet?
here it is. I did the Streamline app for my SM LLC tax business. Should I have included on that app the lost short-term rental income for cancellations? So that's your tax business and the short-term rental income. It's all so it's all combined. This is for the EIDL or the PPP program. If it's the PPP program, John, what do you say on that?
What does he want to do? It involves case, so that says something right there. But what does he want to do?
I did the Streamline app for my single member LLC tax business. Should I have included on that app the lost short-term rental income for cancellations? He also owns a vacation property that he rents out on Airbnb, and he's obviously lost money on that.
And it's in the same entity?
It's a single member LLC for tax case. I don't know. Case, we'll talk outside of this.
$100 to buy another LLC, dude. So yeah, so when they contact you, I would ask that question, and yes, I probably would have included it. And here,
it's for the EIDL, so it's not combined. So the EIDL, you just you don't put anything down on that.
Oh, then what are we missing? Yeah, I mean, if it's one entity, he can only get one loan.
Yeah. So,
all right, I'm going to close the poll if I didn't already. And anybody who needs the link for the other class, email me, John at taxpracticepro.com. Do it soon. I'll take care of it as soon as we're off here. Then we know if OT Pro payroll software has a PPP specific report. We only just saw Gusto, Lee. I haven't seen the anybody else have one yet. I was kind of hoping that QuickBooks was coming out with one, and/or Intuit Online Payroll pay cycle.
I would imagine they all are going to have something eventually. Whether they have it now or not, is to be seen. But I'd imagine all of the payroll programs is going to have a report for this.
Cecily, 2.5 months it's going to forgive. All right. So we're going to call it a day, everybody. Thank you for attending. We really appreciate it.
Yes, I appreciate you guys coming. Thank you. All right. So how many did we have on the thing, John?